In the meantime, the Central Bank of Nigeria and a consortium of central banks from Asia, the Middle East and Africa have taken steps towards developing a cross-border market in Islamic financial instruments by issuing a $490 million SUKUK. Well, this trend is said to be one that could significantly open up the Nigerian market. For more on this, I'm now being joined by ABIOLA Razaki's team lead research at UnitedBank for Africa. Thank you so much, ABIOLA. Let's quickly start off with expectations for market trading today. We saw the OSHA index down by 0.14% yesterday. The banking index taking the biggest hit, down 1.9%. Is this a trend we could see continuing today?
Thank you very much, Esther. Apparently, the market is oversold at this level, currently trading around a 12.2 times earnings multiple. But interestingly, we believe that the market is yet to bottom, particularly that the sentiment is actually still negative within the financial services sector. But the interesting thing at this point is the fact that some technical indicators are already pointing towards a recovery in the market. And that's why today we expect that there should be some level of stability in the market. Overall, our expectation is for the market to close flat, as we expect that inflows from the pension fund managers, who of course are beginning to get remittances for the month end of August, should provide some liquidity into the market today, and of course that should balance out the negative sentiment on the financial services sector. So overall, I think it's going to be most likely a flat market today.
Let's talk about this SUKUK bond or Islamic bond. It seems to be a growing interest in non-interest financial instruments. We're seeing the Central Bank of Nigeria and a consortium of other central banks in Malaysia, the Middle East, are floating a SUKUK bond worth $490 million. What kind of significance can this have for the Nigerian market in terms of opening it up?
This is very significant to the Nigerian banking system, particularly the non-interest banking segments of the Nigerian system. And of course, the issue of the financial inclusion that the CBN and all the other banks have actually been charting a course for over the last 2 to 3 years. I think it's more important when you look at the dynamics of the Nigerian population, in terms of about 50% of Nigerians today are actually Muslims, particularly those in the north who are relatively averse to the traditional interest banking system. I give you, for instance, a statistic that says less than about 15% of the banking sector assets and liabilities are actually exposed to the north. And of course, this is largely because of the religious sentiment against the traditional interest banking system. So for me, I think this is a good step for us in the country. It opens up new investment asset class in the market. And of course, this is going to be a major liquidity and of course a good benchmark for the non-interest banking activities that we'll see going forward. And of course, we should also remember the fact that Osun State government is already looking into issuing the first SUKUK bond in the country. We're looking at the possibility of maybe before the end of September or maybe early in the fourth quarter, we should see about 10 billion naira SUKUK offering from Osun State government, which of course is going to open another opportunity for both corporate and of course the subnationals and even the national entity to actually issue the non-interest banking debt instruments in the market going forward.
Okay, do you think this is something regular asset managers, fund managers would be interested in?
I think they will be interested in this. One, from the perspective of the sentiment, particularly those that typically prefers a non-interest banking asset. Of course, we've seen some, for instance, ethical funds launched in the market over the last 4 or 5 years. Yes, there has not been significant traction to the ethical funds, which largely invest purely in non-Sharia related, in Sharia compliant assets. But of course, I think this is also going to be a major new investment asset, particularly in the debt market. So I think, yes, the asset manager should be interested, particularly that SEC rule is already out with respect to that. And of course, the SUKUK bond should qualify for pension fund investment asset, as well as some asset managers who are typically interested in non-interest banking assets, non-interest earning assets should also be looking into that. So I think this is a good step.
Okay, let's talk about the concept behind this idea, as it were, where both the issuer, or both the bank and the borrower, as it were, in the case where the investor goes to take a loan from the bank. Now, the bank obviously has to see the business as viable, but of course, there could be an instance where the company runs at a loss and the bank has to take that hit also. So in terms of this working out eventually, or the risk involved in the bank losing out at the end of the day, how do you think this is going to be taken?
I think this is more of like a fair and equity instrument. And I say that because this is more of like a profit and sharing model, which for of course, the Sharia, which is the major basis behind the non-interest banking and debt instruments offering internationally now, actually proposes. And I think one interesting thing that we have to look at here, for instance, is the issue of the banking sector crisis that we had about 2009, 2010, when, for instance, there were a lot of NPLs. If we are to be in the case of an Islamic-oriented or a non-interest banking system, the bulk of those losses that were actually recorded on the back of those NPL formation will actually be shared by both the depositors and of course the banks. And I think one thing we have to understand here clearly is the fact that there are different forms of SUKUK. For instance, the one that is going to be issued by Osun State government is actually going to be used to finance education projects, and in that case it actually qualifies for the Ijaro form of SUKUK, in which case it's more of like a lease agreement wherein the issuer of that note, for instance, use that in form of like a project finance instrument, and of course the finance the education project, and at the end of the day they pay rent on that, which is be used in servicing that debt instrument. You can have for instance, a muraba, you can have a mudoroba, you can have a musharaka. So it depends on the different form. For instance, murabaha is the form of the asset-backed finance, which of course is also very much available in the traditional banking system today. So, and that's why I said it's very important that we have a clear understanding of the different form of SUKUK, and of course the issue of the trust between the issuer and of course the providers of the capital. I think trust is very important in Islamic banking, and of course a good number of disclosure is actually expected to, particularly from the perspective of the issuer now, because it's more of like a trust and asset management mix, so to say.
Thank you so much, Abiola, for shedding some light on that for us. We're going to have to leave it there. Abiola Razak, Team Lead Research at UBA, looking at the market trade ahead of the opening bell, and of course growing interest in non-interest financial instruments. That's a wrap on Open Exchange West Africa for today.